Hello and welcome to the Lancashire Police Federation first ever digital pre-retirement seminar. We're obviously filming this during what are challenging times, and for the first time we're doing this by the medium of digital filming. You're going to see some really useful inputs today, and these are only matched by some of the lockdown haircuts that you're going to witness as well. So bear with us, it's new for everybody today. By way of introduction, my name's Ian Hanson, formerly a Lancashire police officer for 17 years, joined in 1987, and in 2005 I went over to the dark side in GMP. And for the last 10 years I was chairman of Greater Manchester Police Federation. I'm going to be assisted today by my able and not very elegant assistant Lee Hughes, who's going to talk to you very shortly about financial investment options and everything that goes with that entire package. And following on from that, you're going to hear some really useful inputs about estate planning, wills and probate, how to protect your assets, and also many of the services that the Federation offer you in retirement. We're going to speak to you about investments and sound financial planning. And I want to be really clear about this. What we are not saying is invest with us. What we are saying is equip yourself with all the available information that's out there. There are reams of information available on the internet, through inputs, through the Federation, through people like Lee. These are really important decisions that you're making as you move towards retirement, and it's really important that you make these decisions with the best possible advice. Now, on this slide you'll see this was on TV over the last 12 months. And it was put out by the regulator, the Financial Conduct Authority, to protect people like me and protect people like you who have got, let's be honest about this, some pretty significant lump sums coming, because we're the lucky ones. We've not had our pensions messed with by the government, so in that respect nothing's happened to us, and we've got these once in a lifetime lump sums coming to us, and it's really important that we protect them. And there are people out there who will steal from them. Your police officers, you know that these people exist. They're very plausible, very credible, and these are real examples where people have taken pension funds which people have spent their lifetime filling, and they're gone overnight. So there's a phrase, if something seems too good to be true, it is. On the website, on the Financial Conduct Authority's website, there is a list of popular scams, scamming companies, and you can get advice from advisors through the Federation. You can contact people. Please tread with the utmost caution when you're dealing with lump sums that will be based upon you'll be basing financial planning for the rest of your life on. Okay, what we're going to hear about today. We're going to talk very shortly about preparing for retirement, the effect of inflation on your lump sums and also your monthly income, your pension income in retirement, and linked to that, commutation against maximum monthly income, money management, how to effectively manage that massive asset, and also the risk. There's risk in everything. There's risk in me driving to this place today, so you need to understand that risk. And we're going to talk also about estate planning. Now, preparing for retirement. Let's be honest, for the last 35 years, you've pretty much known exactly when you're going to retire. So don't let it sneak up on you. Have a plan. You'd be surprised how many cops contact the Federation and NARPO literally a matter of weeks before they're going to go, asking, what do I do? Some police officers actually go into a kind of denial. They've done something for 30 years. It's like me, I joined the police when I was 19, and it's a massive wrench when you leave something which has been your life for 30 years. So there is a tendency just to turn a blind eye to it and ignore it. Don't do. You've got to plan this. You've got to look at every aspect of it's not the end of policing, it's a transition for you into a new chapter of your life. Now, that payslip you get every month, sit down and have a look at that. See what you're spending your money on, see what your outgoings are, and decide what you're going to keep. There'll be things that you're definitely going to keep, and there's things that you're going to think, I don't really need that now I'm retiring, but look at them, get a folder and put all these things in. I'm going to mention briefly, you're going to have a bigger input very shortly, but the group insurance, this is an absolutely massive one, and it was the bane of my life to some extent when I was GMP chairman. When retiring cops have got time on their hands, they tend to look at how they can save a few quid here and there. Don't do it with the group insurance. If you're a member of the group insurance, you are in a platinum, wonderful financial product that gives you so much protection in terms of life, critical illness, travel, motor breakdown. The list's almost endless, and I know my colleague Paul Kelly's going to talk to you about this later on. Now, we do have, though, every time people retire, we have a group of officers retiring, they look and try to see how can I save a fiver. And then something's only as good as what you pay for it. And you get this basic insurance policy, travel insurance policy, and then you try and make a claim on it 12 months down the line, and you find there's that dreaded small print. Now, that doesn't happen with group insurance. You're part of an entity, and you have got a enshrined right to move from the serving officers scheme to the group insurance scheme for retireds, and you will stay there till you're 70. However, if you leave it and don't become a full member of the retired scheme when you move over into as a retired officer, you will lose all rights. You can't join 6 months down the line. You've missed the boat. So I really want to reiterate that, and I know Paul will run over it later. Something else which doesn't work for everybody, but works for some people, and certainly worked for me. If you've got the option to retire as the light nights are unfolding, give it some real serious consideration. You are going to undergo a massive transformation from everything you have known and breathed over 30 years. And chances are your partner, your friends, family members, they'll probably still be going out to work. As I say, it doesn't work for everybody, and some people can't do it, but if you can retire May, June, as the light nights are with us, the hopefully decent weather, it increases your options and it helps you through the transformation, as opposed to doing it in November, January, February, when you sat on your own, at home, in the cold, everyone's out at work, looking at the wind and rain out through the window. As I say, it doesn't work for everybody. We've had some really positive feedback off people who said that worked. And it's, as I say, it certainly worked for me. And again, something which is really, really important. You have done one of the most demanding, dangerous and stressful jobs that we ask of anybody in our communities to do. You've seen and done things which nobody should have to see. You'll have gone home elated, absolutely full of the job and loved it. And just like me, you'll have gone home and you'll have cried at some of the things you've witnessed. You're at the end of that now. You're moving on. So, yes, we're advocating here sound financial planning and looking after your assets. But there comes a time in life where you have to say to yourself, what am I actually saving for? Just give some consideration now to releasing those purse strings, spending a few quid, have that holiday, treat yourself and your family and your loved ones, and live a bit. You've earned it. Okay, I'm going to talk to you now about consumer inflation, and that's a pretty sterile, boring topic. As cops, we got our annual pay rise and increments, and inflation wasn't something which we paid much attention to, but it will be now. And as a retiree, as a retired officer, you are more exposed to the effects of inflation than a serving employee in any nature whatsoever. Like, quite simply, inflation is the increase in prices paid for goods and services. Now, you might wonder how that is going to affect you, because you've got a lump sum and you've got a pension, which will be index linked. Now, to illustrate that, we're going to look at some figures. Now, on here it says 1989 to 2019, but not much has changed. We're in 2020 now. Let's just pick a few important things out here. Average house price, shy of 42 grand, and now it's 228. I'm sure it's gone up. Average salary, this is important, and what I'm going to talk to you about centres on this particular point. Look at that figure, average salary, 9663, compared to now, 29588. Other important things, the price of a pint, £1 compared to £3.60. Now, hold that thought there in terms of the cost of a house, a beer and a salary, and think about 30 years ago. It's just over 30 years ago when we all joined the job. Now, if you think back as to how far ahead 30 years felt when you walked through the gates at Hutton Hall joining 30 years ago, that was one heck of a long time ago. But now we're here, we are in 2020, it's 30 years plus from when you walked through that gate. Now, as a retiree, you've got loads of spare time and you do things like empty the loft and garage. And I came across this, joining instructions for recruits with the forward by Brian Johnson, bless him. Now look at the range there of the salaries. Most basic entry level, which I was on, and probably most of you were, something similar, 7,752. And the top rate there is just short of 18,000 for a top rate chief inspector. So 18,000 for a chief inspector was not an insignificant amount of money in them days. That gave that chief inspector a lot of buying power. That was a good wage. A chief inspector now, top rate, is on something like 55, 56 grand. Okay, 30 years ago, that was a good wage. In 2020, 56,000 is a good wage. So let's transpose the 30 years we're looking back, and let's move that forward. And that's not an unrealistic proposition, because most of you watching this video will last well into your 80s and 90s, because police officers are living longer and longer every year. So let's go forward to 2050, and let's look back at the 55, 56 grand if you're lucky enough to be a top rate chief inspector, or wherever you fall on that chart. That 56 grand in 2050 is going to be worth the equivalent of £17,928 if you don't do anything with it. That is the drip, drip, drip erosion of inflation on your lump sum. If you think of the ease of reckoning, let's think of a £100,000 lump sum. I know they're all more than that. Let's think of £100,000. And inflation's running at 2.5%. Let's say 2% for ease of reckoning. In 1 year, it's going to take 2%. Don't sound much. 10 years, that's 20%. Let's think now ahead at 30 years that I've just mentioned. That's £60,000 in real buying power off that £100,000. That is the effect of inflation, and that is what you've got to guard against and plan for and manage your money in order to mitigate that inflationary effect. This is a really important section. This is your income in retirement, your pension income in retirement. Now, most cops think they've got a pretty good idea about pensions. Everybody says you start to get interested in pensions in your last 3 years, but there are people who think they know, don't know the full detail. I want to just spend a few minutes now explaining it to you. Basically, you can take a maximum monthly income of 2/3 of the best of your last 3 years. So the pension system looks back over the last 3 years, sees which year was your best, and it doesn't necessarily follow that it's the most recent, because if you've been a temporary promotion within the last 3 years, that could be your best one. So it's the best of your last 3 years, and you will get 66% of that. If you want to take maximum commutation, there is a small tax liability, but that's going to be spoken about later. The system will look back, best of your last 3 years, but with a maximum commutation, a maximum lump sum, you will get 50% of the best of your last 3 years. Now also, there is an option to take a commutation, a lump sum, but without a tax liability. So you're taking slightly less. And the way to think about this is think of a slide rule. Taking 0 lump sum will give you maximum monthly income. If you take maximum, it's 50%. But this is really important now. It talks about 50%, but in reality, it's not 50%, because you're not paying national insurance on a pension. So there's another 12%, so you're up to 62. You're not paying pension contributions of 14%. There's another 14, that takes you up to 76. And there are hidden costs like going to work, petrol, things for your car, dinners. So the reality is that you're on 76% plus a bit more of what the best of your last 3 years was, with a maximum commutation. So these are all things that you've got to consider, and it's different for everybody. Everyone's circumstances are different, but you need this kind of information to properly inform your decisions. Okay, I'm now going to hand over to my colleague Lee Hughes from InvestProtectInsure. When I was in Greater Manchester Police Federation, we secured the services of Lee to provide financial advice and investment advice for retiring colleagues in Greater Manchester, and the feedback we've had over there, and also working more recently with Lancashire Police Federation, has been really, really positive. It's accurate to say that Lee is a specialist in the area of investments and pensions and does a load of work, not only with retiring police officers, but people from the education sector and also the medical sector. And the feedback across the board has been nothing but positive. And I'd ask you just to listen to everything that he says. Thank you.
My name's Lee Hughes and I own InvestProtectInsure Limited. I've given financial advice for 20 odd years now, and I've been privileged to be working with the Police Federation for the last 8 years. Greater Manchester Police, Lancashire Police and Cumbria Police as well. So it's good to be here speaking to you today. Normally we'd obviously be face to face, but under these circumstances we're doing it via video. So I hope that's working okay for you. What I will say is that it would be really useful if we can make contact after this video and basically do some kind of face-to-face over a video link if you're not comfortable actually meeting up face-to-face. That way we can talk more specifically about your own circumstances and make it a little bit more sort of like personalised to you. But we're going to cover some general stuff off today that will hopefully get you thinking along the lines of retirement and what's in front of you. So the slide that we've got on the screen at the minute shows a typical police officer who is retiring now, based on a salary of £42,000, 53 years of age and 32 years service. That would generate approximately a pension of £21,000 with a tax-free lump sum of £145,880. The current monthly net salary in employment would be £2,268, and as a pension it would be worth a take-home of £1,567. So roughly speaking, there's a shortfall there of about £700 a month from when you were working to going into retirement. As Ian has previously said, and absolutely spot on, in retirement you won't have pension contributions and there will be other things that you would normally pay into that you wouldn't be paying into. So to plug the gap, you don't necessarily need £700 a month. Obviously you've not got the expense of going to work and whatnot. So we can hopefully help you get close to what you're used to by following some of the tips and maybe listening to some of the advice that we've got for you. Moving on to the next slide, one of the big questions is why take the lump sum? Why not take a greater level of income? And in all honesty, it all depends on personal circumstances. Everybody's situation is completely different. So, for example, there may be people out there who aren't too bothered about taking a lump sum and they just want the income. Other people are all about the lump sum and less about the income. Well, just a couple of thoughts on that. First of all, any lump sum that you take is tax-free. So it's a tax-free lump sum that you're getting. If you do not choose to take the lump sum and you then take an enhanced income, the enhanced income would be subject to tax, probably at about 20%. But again, we would discuss that on a one-to-one basis to make sure we get that figure right for you. So the idea is that by taking the lump sum, you're getting that money tax-free. If you don't take the lump sum, it's going to take a good number of years to take that money from your pension, the equivalent, via an income situation. And what we often find is that you may have to live to 80 years of age or beyond just to get back the equivalent to the tax-free lump sum. So one of the useful things about taking a tax-free lump sum now is obviously you're younger, you're healthier, and you've got more opportunity to enjoy that money rather than taking it, dripped out of your pension over a long period of time. Some people, not completely expected, you're retiring fairly young. A lot of people, retire in the 60s. 30 years service in the police, it's well earned. You get to retire a little bit younger. So if you're retiring in your early 50s, you may still have dependent children. You may have kids that you want to help through university. You may have some debts, credit card debts, or you may still be paying a mortgage. That's completely normal. And maybe you want to give some thought to paying that debt off. We can help you with that and we can give you some guidance on it, because sometimes it's appropriate to do that and sometimes it's not necessarily appropriate to do that. As Ian said, it's important to live a little because you've earned it. So you maybe want to keep some money back and enjoy some holidays while you're fit and healthy and you're able to do so. You may want to do some home improvements, getting the last jobs done on the property before getting into sort of like serious retirement. You have the freedom to spend that cash as you wish. So by taking it as a lump sum gives you a lot of flexibility that you don't have if you take it as an income. Okay, so why not take a tax-free lump sum? Why should you consider taking a higher level of income? Well, are you prepared to accept a lower inflation-linked monthly income? So, for example, I speak to a lot of retiring officers who maybe, just to live need sort of like £1,200, £1,300 a month just to pay bills and to put food on the table, etc. And by taking a higher level of income, it frees up more monthly disposable cash so that they can get by a little bit easier. Do you feel comfortable being able to manage a large amount of cash? That's another good question. There's a lot of officers that I've come across that prefer to invest money rather than leave it in the bank because they simply, don't want to manage that large amount of cash. They don't trust themselves with it. Some people feel it's safer to take it as an income. Also, do you have existing savings? If you've already got significant savings behind you, maybe you've saved into ISAs over the years, maybe you've had an inheritance at some point and you've already got a large amount of cash on the sideline, do you want to add more cash to that situation, or would it be more appropriate and more sensible to take it as an income? Also, one other thing worth considering, that anything you do take as an income will receive like a cost of living rise each year. So over a potential 30, 40 year period, there'll be significant rises on that money. Whereas if you take it as a tax-free lump sum, then you're relying on investments to generate that kind of inflation-beating return. Okay, so in summary, the decision to take the tax-free lump sum or whether to take it as an income is pretty much a subjective decision, and ultimately it's your call. I'll help you and I'll give you some advice, and I'll point out the pros and cons for your situation for both scenarios, taking it as a tax-free cash or taking it as an income. But we generally say a bird in the hand is worth two in the bush. So if you can get the money now, you've had it. Whereas if you are waiting 30 years plus to get that money, it's kind of a gamble whether you will actually get it or not. And on a one-to-one basis, we will do some calculations with you and tell you how sensible it is to take the tax-free lump sum and how appropriate it is for you. Okay, so assuming you've decided that you want to take the tax-free lump sum, and I'll be honest with you, most people do, what do you want to do with that? What is your plans for that? There's quite a few options, and again, everyone's situation is different, and the recommendation on what to do with that lump sum will be different for everybody. So some of the things that you might want to consider is possibly the repayment of debt. Have you got some debts that are costing you money each month that you could do with getting rid of? We would need to look at the interest rates on those debts and see whether it does make sense to actually pay them off. Emergency funds. It's important that you keep some money back that's cash and accessible. So even though interest rates in bank accounts are terrible, it's very useful to have money accessible, sort of like instant access, so that if something goes wrong, you've got access to money that you can put it right. Crazy things, the roof was out on the house and you need £10,000 to put it right. It's wear and tear. It's not covered on your home insurance. Have you got access to that kind of money to be able to do a job like that, or will you need to go into debt to get the job put right? Things such as helping family. Children may come to you and need a bit of support at some point. Do you have funds on the sideline to be able to help them to do that? It's important to keep some money. Conversely, you don't want to keep too much on the sideline because obviously you're not really making any money on it when it's in bank or building society. So speak to us and we'll help you and we'll give you some ideas on what's a sensible amount of money to keep on one side. And obviously you need to think about investing for the future. As Ian's rightly said, you could be in retirement now for 30 plus years. Life expectancy is somewhere around 80 years of age now, and it's only going one way. So if we turn the clock forward 30 years, you may find that you've got more time in front of you. Sadly, not all of us will get there, but the idea being that is you invest that money and you make sure that it's worth at least what it is today in the future, you need to make sure your investments keep up with the rate of inflation. So for example, if if a pound buys a loaf of bread today, how much will you need to buy that loaf of bread in 30 years' time? That's the way you've got to think, even though it's on a bigger scale. A couple of things you might want to consider when we talk about managing lump sums. There's a couple of useful benefits to investing. Something that you've perhaps not considered is obviously at some point in the future, many of us will need long-term care. And although at the minute it's probably not a consideration, when you get into retirement, it could be worthwhile thinking about where you invest the money to make sure that that money is protected from long-term care costs. We can help you with that. One of the benefits of investing is the possibility, as I've said, taking an income. Should you choose to do that and take an income from it, it's not unreasonable to expect, £400 or £500 a month dropping into your bank account as a tax-free income. This would be in addition to your pension. It could plug that £700 shortfall that we pointed out earlier. Talk to us about that. We'll give you some examples of how that could work for you. Okay, so when you speak to us, we'll be talking to you about the possibility of investment options. So once we've considered emergency funds and repayment of debts and all the rest of it, and your ability to live on a day-to-day basis in retirement, then we'll be chasing an appropriate investment for you that basically helps you beat inflation, keep in front of inflation, actually see real growth on your money, but also at a level of risk that you're comfortable with. That's very important. So there's typically, there's multiple places you can invest your money, but there's typically three styles of investing. We've got obviously cash-based investments, which we know at the minute you'd be lucky to get 0.5% in a bank account. Inflation's typically 2.5%, possibly even more. So by leaving your money in a bank account, you're probably seeing a reduction in actual spending power of about 2% a year, which may not seem a lot over 1 or 2 years, but over 30 years at 2% reduction, you've effectively seen the buying power has fallen on your money by about 60%. So that's the same effect as having £100,000 and now all of a sudden it's only worth £40,000. So people think that because the number stays the same in the bank account that the money's safe. The reality is it isn't. The spending power is significantly reduced. So you can consider a stock market related investment, and the green line on the graph that we've got on the screen at the minute just shows you the performance of the FTSE 100 in recent years. Okay, now this is not necessarily the performance of the funds that we would invest you in, but what you can see is it's exceeded the inflation, but we've seen some volatility, none more so than what we've seen in the recent months with the coronavirus. There was a short and sharp, significant drop earlier on this year, but as you can see, the green line is now recovered significantly and is well on its way to getting back to where it was. So I'm pretty pleased to be showing you this slide and to show you an example of how the markets can perform. And basically that there will be ups and downs in that style of investment, but don't panic when the investment is down because it will always recover. So you will make decent returns on that kind of investment, but maybe the ride, the ups and the downs along the way may not be appropriate. Maybe you find that's a little bit too uncomfortable. So we do other funds as well. And one of the funds that we do is the Red Line. Now the Red Line is a fund that's run by Prudential. I'm not recommending Prudential, I'm just using it as an example. It's a smoothed fund. Basically the way that works is they hold back some profits and they pay out the profits through lean times, obviously taking the profits a little bit down through taking profits back through better times. So what you see there is a more predictable straight line graph, despite the fact that even on that particular investment we've seen a drop as a result of coronavirus. I think the maximum drop on that was 12%, where world stock markets fell by about 30%. So even in downturns, it well outperformed the market, and it was a much more comfortable ride. So to give you some ideas, at the bottom of that graph, there is a table of performance that shows you how things have performed over the sort of like 1 month, 3 months, 6 months, all the way up to 10 years, and what you can expect back. The smoothed fund, the Red Line, is very popular with retired people because it's predictable, it's smooth, it's steady, and there's not really too many sleepless nights with that. The reality is you have to be prepared to take some risk with investing, because simply leaving it in a bank or building society carries risk of its own, which is obviously the effects of inflation. But getting the risk level right is really important. Whatever you do, just don't do nothing. Make sure you speak to somebody about it. I'll give you another scenario. I was introduced to a police officer a while back who had retired 5 years previously. He took his lump sum, which was £140,000, stuck it in the bank, done nothing with it, and gradually dipped into it and spent 40 grand over 5 years, had a couple of jobs done on the house, changed the car, a few holidays, and his 140 grand was worth £100,000. When I spoke to him, I showed him a few investments that basically would have returned without too much risk, would have returned him 40% over that same 5 year period. So that guy would have been able to spend what he spent. He would have been able to have the home improvements, the new car and the holidays, but he would have still had his £140,000 invested. So it's very important that you get advice rather than just sticking it in the bank. Sticking it in the bank's not really a good idea. Okay, I'm going to show you a couple of examples and typical scenarios that I come across on a regular basis. These scenarios are fairly similar to what I've dealt with in recent years. So example one is Margaret, age 55. She's going to take £140,000 pension lump sum. She has £70,000 outstanding on her mortgage and has £10,000 outstanding on a credit card. Margaret is really interested in being debt-free and to have some available spending money and invest the remainder, basically to secure a future. So what might the guidance look like for Margaret? Okay, well, the possible guidance may be to repay the mortgage. One of the first things to consider when looking at repayment of mortgage is ensuring that there's no early repayment penalties that apply. If you're in a fixed rate deal at the moment, then you may pay thousands to get out of that fixed rate deal, and it doesn't make sense to do it just yet. You may be better just holding off until the fixed rate period ends. Also, one of the things that you need to consider is the interest rate on your mortgage as well. We're in a period of sort of like, almost unknown low interest rates. So you're looking at some of these deals at the minute and people are paying 1% and 2%. You're getting close to almost an interest-free mortgage. If you can earn significantly more from an investment, or the possibility of earning more from an investment, why would you consider repaying the mortgage unless you really needed to and you couldn't meet the monthly payments in retirement? So again, let's speak about that. Let's have a look at the mortgage that you've got before you make the decision to repay it. Repayment of credit card. In most cases, I would agree, let's repay the credit card. Interest rates on credit cards are notoriously expensive at a time when other debts are obviously at an all-time low. The only time you perhaps wouldn't consider repaying a credit card is if you've got a 0% balance transfer. Some people like to just be rid of the debt, but when you take a step back and think about it, if the debt is interest-free and you've got money in an investment earning you a reasonable return, it doesn't make sense to pay that credit card off if you can afford to repay, keep making the monthly repayments. Okay, so for Margaret, it seemed appropriate to recommend £10,000 to leave in a bank, even though we know we're getting next to nothing in terms of a return on it. It's accessible in case of emergencies. Useful for her to dip into if she needs to do a repair on the car or replace the washing machine or whatever it is. That would leave her with approximately £50,000 to invest in a suitable, cautious investment. And that basically could be the final solution for Margaret. Okay. So the next example I've got for you is John, age 51, getting a lump sum of £100,000. His personal situation is a little bit more complicated. He's got £75,000 outstanding on his mortgage. He has £25,000 personal loan. That's maybe from some debt consolidation or something like that. But he's still got £15,000 on a credit card. He knows he cannot fully repay all of his debt, but he wants to repay as much debt as possible, but yet keeping some money back as an emergency fund. So what might the solution be for John? Okay, well, let's have a look at repaying the loan and the credit card first. The reason why we would look at those first is that the interest rates on those are likely to be more than what he's got on his mortgage. So we would first of all check for any repayment penalties on the loan and the credit card. We would look at the interest rates that he's paying on those and then perhaps make the decision to repay them. We would possibly recommend a remortgage, basically repaying £40,000, leaving him with a £35,000 mortgage, which is more than manageable. Tie it in on a fixed rate deal for maybe a 5-year period, you know, the repayments would be very low on that. That would leave him with £15,000 to keep in the bank as an emergency fund. So the key message there is tackle the debts with the highest interest rate first. We can reduce the mortgage, but the mortgage isn't as much a priority as the debt that carries the higher rates of interest. Hope that makes sense. Okay, just to summarise what we've looked at with those two examples. Is the debt manageable in retirement? Are the repayments easy to meet? Can you meet it from your pension? If so, then we're okay, we don't have a problem. When we do look at repaying the debt, let's repay the debt with the highest interest rates first. That's credit cards, overdraft, personal loans, possibly car loans, and probably your mortgage last. Okay. We need to consider as well the potential investment returns. If your investment returns are potentially greater than what you're paying interest on your debt, it may be worthwhile considering investments, and that way retaining some funds and retaining some wealth. It's worth pointing out that the lump sum that you're going to get now is probably it's the accumulation of 30 years work. It's important that you look after it and you make the right decisions with it. The likelihood is you're not going to, even if you get another job, you're not going to put 30 years into another job, and it's likely that you're not going to get another lump sum of this significance coming your way anytime soon. So look after it and make sure you get the best advice really and put it in the best place that you can. So we need to consider risk and investments. How does that look? Well, when making financial investments in any form, the most important consideration for many is the amount of risk they are willing to take or willing to tolerate to generate a return. What factors should you consider? Okay, well, risk versus reward. This is the trade-off all the time. How much risk are you willing to take for the potential of a greater return? And in theory, the greater the risk, the greater the potential of return. It's also worth remembering that when you get into retirement, you've actually spent 30 years building this money up. So is it appropriate to take too much risk? Some people will look at their lump sum and they will think to themselves, well, with some of it, I will take a higher level of risk, but with the majority of it, I'll take a fairly cautious approach to it. We can help you with that, not a problem. Some people just want cautious investments all the way. Some people have a little bit more appetite for risk. We have whole of market access to whatever funds there are out there, so we can find a match for you that's appropriate. It may be a single investment, or it may be a combination of multiple investments to get the appropriate level of risk and to get that decent return for you. The reality is that even with banking crisis and coronavirus and whatever else there is out there that upsets markets always recover and come back stronger, and you're in a far better position investing your money than what you are leaving it in a bank or building society account, even though there will be times where you think it's a little bit uncomfortable because the markets are down. Those times don't happen often, they do happen, but it's important that you work with us through those periods and we make sure that we sit tight, we hold on, and that we've got the money in the right place so that if you need access at a particular time, we've got access to it. People with a more cautious attitude to risk are prepared to accept little to no fluctuation in their investments, and people with a more balanced attitude to risk, they may be prepared to accept those fluctuations and obviously, enjoy better rewards further down the line. So we need to consider term when we invest money as well. Term is very important. How long are we going to invest for? If I sat down with you and you said to me, Lee, I've got this, venture that I want to do in a couple of years' time. I may want to, buy a property abroad or whatever it is, and it's a goal that you have that's less than 5 years, then the reality is I'm probably going to tell you to leave your money in the bank or building society, simply because anything that you're investing should be considered as a medium to long-term investment. So once we've agreed how much you're going to leave in bank or building society, you probably need to consider that anything you invest is going to be left for 5 years or more. That doesn't mean that it's not accessible. If something drastically went wrong in your personal circumstances and you needed access, whatever you do with us will have access. But I would say don't invest with us unless you're considering doing it for 5 years or more. Okay, so there's also two different strategies for investing. One of those is investing for capital growth, and the other is investing for income. If you find that you are getting by quite comfortably with the pension that the police pension scheme is going to pay you, then you may want to invest for capital growth, knowing that that money is going to be accessible to you. You can take the profits off it, or you can dip into it whenever you want at some point in the future. Other people find that the drop in income from employment to retirement is a little bit steep, and they wish to top that up. And instead of allowing your investment to grow, you can take an income from it, which will obviously affect the growth, but will provide you with a decent income along the way. That's sometimes quite useful for people in retirement. Okay, so what do you get when you invest with an advisor? Well, first of all, the guarantees are important. As a firm, we obviously subscribe to the Financial Services Compensation Scheme. The FSCS, as it is known, is basically set up to protect investors. Should an institution go under or bust, so that is, for example, your banks or your building societies or the investment companies that you invest with, then you get an awful lot of protection. So any monies that you've got in your bank or building society, you're protected up to the value of £85,000. That is per institution. So for example, if you've got money invested in TSB, then you're protected up to the value of £85,000. Anything over and above that you want to keep in a bank account, you need to make sure it's with a different bank, also a different bank that doesn't share the same banking license. We can probably help you with that. In terms of investments that you do with us, £85,000 per institution. If we talk about bonds or pensions, then you've got 100% protection on those. What risk do we face when investing money? Well, obviously we've got the risk of investment fluctuations. Fluctuations will happen with most investments. Some investments values will change on a daily basis, some are a little bit smoother than that. You've also got the risk of returns not keeping up with inflation. That's particularly relevant for bank accounts. You've also got the risk of the investment company failing. Our job as advisors is to ensure that you get the full level of FSCS protection that we've mentioned earlier. Fees. There's a couple of warnings here for you. Just be aware of cold calls offering pension and investment reviews. There's a lot of companies out there that will just phone you up based on your age, date of birth, and you're on a list somewhere. They will know your occupation and they will know that you are coming to retirement shortly. They will be phoning you up basically just to get your details and to try and get you to agree to a review, and they will sell your review to the highest bidder, who may be maybe not necessarily a regulated and approved advisor. So be careful of cold calls. Also, as Ian mentioned earlier, if something seems too good to be true, it probably is. If someone's promising you fantastic returns that sound way over and above what is normal out there, then it's probably not realistic. Make sure you're speaking to an approved advisor. There's a lot of scammers out there. Check that the advisor you're dealing with is registered on the FCA website, check his reviews, maybe speak to other people who've worked with him and check, with existing customers. If someone's referring him to you that he's done a good job, then that's, quite good. Check his documentation, make sure he's got professional indemnity insurance and all the rest of it. In terms of fees for investing, industry standard ranges between 3.5% and 5%. Okay, there are some firms that charge more than that. It's expensive to invest. I've worked with the Police Federation for a long time and I get a good number of clients from there. So our fees for investing is a special deal that we do for the police. We charge 2.5%, so it's considerably less than market average. The idea is that if you're working with us, there's lots of other police customers that we work with as well. There's plenty of you. There's a lot of people out there that will give us recommendations. More importantly, the actual cost of doing investments with us is considerably less than what you will pay out there. Some firms charge big penalties for access to your money. Anything that you do with us is not locked away, and there is no charge for you getting at that money if your situation changes. Always check, even with reputable firms, what the penalties are should you need to access that money earlier than planned. That's really important. I hope the information we've given you there has been useful, and I hope it generates enough interest for you to be interested in speaking to us. One theme that runs throughout this is whatever you do now heading into retirement is please don't do nothing. A consultation with us is free of charge. It doesn't cost you anything just to sit down and have a chat, run through your situation, run through your thoughts about what your intentions are heading into retirement now. If we can see any pitfalls for you, then we'll point those out. We can also maybe give you some guidance on perhaps what you want to consider. What you choose to do is obviously your decision. So hopefully, if you've seen enough and you're willing to speak to us, then we're more than happy to see you face to face. If you would rather do it via the video call or something similar, then obviously we've got a Zoom facility. We can set you up on that, send you a login, and we can have a conversation face to face over the internet. That's fine, whatever your preference is at this moment in time. So thanks very much for that. I'm now going to pass you back to Ian and he'll introduce the next section. Thank you.
Okay, as you've heard, the central theme that's run through everything that we're going to talk to you today about is whatever you do, do something. Give everything some thought. Think about how you want to manage your transition into retirement. You're going to hear very shortly about some perfectly legal ways to protect your estate, to put a bubble around everything that you've worked for the last 30 years. We're going to talk about wills and trusts. We've heard about investment bonds from Lee. The Federation and NARPO have got some absolutely outstanding service providers. Both organisations get criticised. We've all done it at some point. But what we are very good at doing is looking after police officers and looking after police officers in retirement. So make use of that expertise. That expertise has been built up over decades. We've got some fantastic people who really are at the top of the game, who are there ready and waiting, like Lee, to give you the best possible advice for free. Advice is free. Okay, there's a central theme that runs through everything that you're hearing today, and that's whatever you do, do something. Take control of your retirement. This is a transition. It's not the end. It's a new chapter. You're going to hear shortly about some perfectly legal ways to protect everything that you've worked for. These massive lump sums, and let's be honest, they are. How you can wrap a bubble around it and protect it. Wills and trusts, investment bonds. You've heard from Lee, some fantastic ways in which you can make that work for you so you can enjoy the same standard of living for many years. The Federation and NARPO have been around for a very, very long time, and over those years, over decades, they've amassed a bank of expertise. These are people who are absolutely at the top of their game in terms of providing you the best possible guidance as you move into what's a new chapter in your life. It's not the end of policing. New chapters, new opportunities are opening up to you. And really importantly, you do now have to ask yourself, while you've got this little bit of extra money floating around, much more freedom, what am I actually saving for? Yes, we're saying be prudent. Yes, think about investing. Yes, think about ensuring you can maintain that standard of living for the next 30 or 40 years. But equally, it's really important to start living a little, start to enjoy yourself, lighten those purse strings and go out there and have a bit of fun.
Hello, I'm Tony Harvey from Harvey House Solicitors. We are experts in giving advice on wills, powers of attorney, trusts and such matters. We think education is really important, and a lot of what we do is just about that, giving information and knowledge to member organisations like the federations and NARPO to help you and your family look after things properly and deal with things when problems occur or people pass away. We realised a long time ago that many solicitors and free will writers were getting it wrong. We shouldn't sit back and wait for bad things to happen to you and your family, leaving everyone without any options. We should tell you in advance about how to prevent bad things happening through sensible planning. And we do that by offering you and your family as members of the Federation free individual advice sessions, which we call advice surgeries, either in person when that's possible at Lancashire HQ here, or you can go to our website, harveyhowell.co.uk, and fill out a simple form giving some information about yourself in complete confidence, and we will produce a personal report for you setting out the sort of things that we think you should put in place for you and your family, with full and transparent pricing about what that might cost you. And that service is free to you. as a member of the Federation. And that's met with huge success, and we've advised thousands of serving and retired police officers over many years. As I say, we think education is priceless. Traditionally, about these things reserved for the wealthy, but available to all of you, free, through the services we provide through the Federation. The sort of stuff we will talk about in the free advice session or in the report is, for example, lasting powers of attorney. If you or your family become so ill or in an accident and lose what lawyers call capacity, and officers will understand notions of responsibility and capacity, it's the ability to decide for yourself. This means your family face real problems. No one can deal with your property, your bank accounts, direct debits, your home. No one can speak for you about your treatment, where you're cared for, or indeed how you're cared for. Not your partner, not your children. They have no say. And over many years, we have seen heartbroken families have to deal with these problems. I can give an example of a former client, a NARPO member, a widower, had a stroke and was in hospital. And whilst in hospital, the pipes burst in the house, causing £80,000 worth of damage. Well, it's fine. The officer was insured, retired officer was insured, sensible guy, but no one would speak to the family about the claim because they're not the insured. The family had to make a very time-consuming and expensive application to the court to get the power to speak on behalf of the retired officer, and that took many, many months. And when they finally were able to make the claim, the insurance company refused to pay out the £80,000 because the house had been unoccupied for more than 60 days. And to make matters worse for that family, they put that retired officer in a care home against the family's wishes, who wanted to care for the officer at home. But of course they had no power to make that decision. So what's the solution? It's a no-brainer, really. Think about signing a very simple document which says in the event that something bad happens to you, could be other family members, could be your parents, and they lose capacity, dementia, stroke, accident or illness, a named loved one can take over, can become them in law, and the banks and the authorities and the medics and the carers have to consult, and you are the decision maker on behalf of them. There are two types: property and financial affairs, which deals with property, bank accounts, dealing with direct debits, dealing with the BT and so on, and health and welfare, dealing with decisions about how you're treated, where you're treated, what medication you take and so on. Because you're not allowed into the doctor's consultation unless you have this power. So powers of attorney, we are big fans of them, and we would advise you to consider those in your free advice that we give you. We'd also talk to you about wills and trusts. Many people we find have what we call a simple will in place. That's everything to my partner or spouse, and when we both pass, to the kids. Well, that's what the law says automatically. You've added nothing to the general law by having a simple will. What about protection from care home fees, probate fees, protection from bankruptcy, dealing with children from previous relationships, looking after vulnerable children or adults, guardianship, access and guardianship to children and grandchildren, claims against the estate by disgruntled relatives you've left out, probate registration charges and fees. There are many, many questions to consider that a simple will doesn't deal with. So we can sort these things out for you with advice about a proper will and the use of trusts, if they're for you in your family circumstances. Now, people insure their cars, their TVs, their mobile phones, their bicycles, their boilers, but do they ever really insure the most important stuff they've worked for over their lifetime, like their house? Not really, because most people don't know. They don't have the knowledge. They don't know what they need to do to protect their assets, their hard-won assets, from potentially catastrophic harm. So people, we often find, know they need to make a will, but if you ask them why, they can't answer the question. They've heard of powers of attorney, and people get into trouble in other families through not having such a power. They've heard about trusts and their eyes glaze over. And they are quite boring and they are difficult and many lawyers don't understand them, but we are experts, so we love them, trusts. When you take advantage of our free bespoke advice service, you will know precisely why and how, and importantly, at what cost. We'll advise you about putting these crucial things in place to protect you and your family. It might not be you, it might be your parents. We often find that one of the biggest assets an officer will receive is their inheritance, or perhaps you need to involve your parents in these important decisions. And our advice, our free advice, is open to your family and close friends. Okay, so in conclusion, don't die. That's the simplest solution. But don't die passing all your assets to your partner or spouse, who then loses them by running off with someone else, or going into an expensive care home and wasting the asset, disinheriting your children. Put a trust in your will. Don't inadvertently cut out children from previous marriages. Remember, a new marriage automatically revokes all former wills. When you say I do, it means I don't in terms of the will, and any children in that will are automatically disinherited. And the record of a police officer, number of marriage we have in our firm is 6. So a simple will won't help that guy. Don't leave your estate to disabled children or adults because they'll lose their benefits. Put it in trust so they won't. Don't leave your estate to vulnerable children or adults. We see people with gambling problems, drink problems, drugs problems. You mustn't leave it to them, they'll blow it. Put it in trust. Don't allow your estate to pass to your married children and they subsequently divorce, the ex-spouse taking half your assets with them in the divorce settlement. And never, ever give your house away to your children or anyone else whilst you're alive. What if they die before you, go bankrupt, or fall out with you? You're homeless. Set up a trust with a life interest for yourself, perhaps your partner, in the trust. And don't just gift money to your children from your commutation, particularly if they're married, because if they get divorced, half that commutation gift will pass through the marriage settlement. We can put something in place for you to protect that. And don't ignore guardianship of children and grandchildren. Set it out straight. People are often surprised that grandparents have absolutely no rights to access to their grandchildren. So it's very, very important that we set those things out in your will. In conclusion then, don't get into a wonderful position financially with perhaps your house paid off, a good income, a pension, perhaps a second job, and not pay attention to the catastrophic things that can happen to you and your family for the sake of spending a few £100s. Causing heartache, problems, which often we can't deal with. So many officers come to us, secretaries, chairs of federations and NARPO branches saying, can you help, Harvey Howell? Can you help? And we say it's too late. I wish they'd come to us a year ago. So please, don't put this off. Do it now. Contact us. It's free to you as a member service. Contact us, call us, or visit our website at Harvey Howell Solicitors. We're gold partners to NARPO, and we are the Federation's lawyers. Thank you for listening.
Good morning. My name is Patrick Cairns. I'm the Chief Executive Officer of the Police Treatment Centres in St George's Police Children's Trust. I'm sure that many of you are familiar with both those charities and have taken advantage of them during your service. What I'm going to do over the next few minutes is talk about how you can continue to benefit from those charities as you approach retirement. I'm going to start with the Police Treatment Centres. Our mission statement at the Police Treatment Centres is to provide class-leading, timely and effective treatment for all of our police patients in order to improve their health, fitness and well-being. We focus on the physical treatment and also on the psychological well-being treatment. We're a long-standing police charity who were formed in 1903. We have 2 separate centres, the first of them in North Yorkshire in Harrogate and the second in Auchterarder in Scotland. We have 24 police forces in our policing constituency ranging from Derbyshire up through the north of England to Police Scotland, Police Service Northern Ireland, the Isle of Man Police, North Wales, British Transport Police, Ministry of Defence Police and the Civil Nuclear Constabulary. So a very broad, eclectic mix. And we're providing that class-leading treatment to the police service for over 120 years. Each year we treat almost 4,000 patients, and about 10% of those patients are retirees. We don't have any statutory funding to support our work, so a big thank you to all of you who've donated throughout your service. We're constantly striving to do things better at the police treatment centres. In recent years at St Andrews and Harrogate, we've revamped our pool, our fitness area, we've installed a sensory garden and an outdoor gym. And at Octorada in 2016, we opened a new health and fitness complex with a brand new swimming pool, health spa, gym and other workout and breakout areas. We're never one to sit on our laurels at the police treatment centres, and in recent years we've had the efficacy of our work evaluated externally by Robert Gordon University, who have announced that we're highly regarded, clinically and cost effective, with follow-ups from the police treatment centres to assess how police patients are doing at the 6-week period and indeed the 6-month period afterwards. Most recently at Harrogate, our centre there, we've recently started work on a super duper £5 million expansion to the centre. It's going to provide us an extra 20 bedrooms, breakout rooms, nursing rooms, complementary therapies, and we're also going to take advantage to improve our wellbeing programme that we're running at the moment and give it a good scrub and completely revamp it. It's scheduled to be complete in March or April of 2021, which will transform the work that we're doing at the police treatment centres at that time. Our treatment is intensive. It's daily. You will see your physiotherapist, who is likely to be the same one that you will see for the whole of your stay throughout the time that you're at the police treatment centres, throughout the day, and they have an on-call opportunity to go and speak to them. There's a range of treatments that are available, and there's a first-class rehabilitation gym which we've recently updated and expanded. Fitness instructors are there that you can consult and get programs both during and after your stay at the PTC. And there's a very class timetable, there's a whole series of activities and events going on throughout the day. And it's not unusual to find our police patients starting the day at 0800 hours with a Pilates class and then running through the day with a series of other opportunities, exercise classes throughout the day until about the 1700 hours point. And amongst all of that, we've got treatment pools, hydrotherapy centres and opportunity to access all the other facilities at the PTC. Your stay at the PTC once you arrived is completely free. All you have to do is to be a donor, which I'll talk about in a little bit. Now, you've heard me talk about the police treatment centres. What I want to do now is to show you a very short video. It's only 4 minutes, but it will give you a snapshot of views from some of your retired officer colleagues from around the country about the benefits they've found from the police treatment centres.
The police treatment centres in Harrogate and Octorada continue to welcome retired officers for treatment. If you've spent the majority of your police service in one of the PTC's constituent forces, you are eligible to become a PTC donor and beneficiary in retirement for a small monthly donation.
I mean, I've been one of those unlucky people, you could say, that's used Harrogate a lot. But I say unlucky in as much as I've had lots of injuries. I'm actually very fortunate to have been here through my 30-year career and since I've retired. The treatment really and the care that's given has been just, it's gone from what was already fantastic. If it could get any better, it did get better.
I thought this place was fabulous, and I still have that thought. I still maintain my opinion. It's almost like going off to another planet. The care and the quality of the treatment and everything here is second to none, and it's constant treatment as well for the time that you're here. The treatment that you receive here is bespoke to you. You get an individual programme. You're prescribed certain classes, fitness classes to do, and your physio treatment and the treatments that you have within the physio package. And it is designed completely for you, which is absolutely perfect.
Things from ultrasound, from exercise, strength building exercises in terms of those joint injuries, and I've had knee injuries before, ankle injuries. I've also been here for recuperation following heart surgery.
One of the first treatments I had, which I was quite sceptical about, was acupuncture in my neck. My neck was really horrendous at that time, and it really freed my neck up. The hydrotherapy pool is absolutely wonderful to me. I find a lot of relief in the warmth of the pool.
I even found myself doing Pilates class, which I laughed about when the physio told me initially. She said, "I'm going to put you on Pilates." I thought, yeah, right. And then once I did my first class, I absolutely loved it. Couldn't get enough. With the addition of the spinning class, that helps as well. It's great for stamina, and it's low impact, obviously, especially for a knee injury. The anti-grav treadmill, absolutely excellent machine. It got me back running a lot quicker than I would have just on a normal treadmill. The physio through NHS just isn't comparable at all. So it's intensive and it works. It really works.
I'm one of the fortunate people, I guess, to be able to afford private health insurance, and I've actually waited longer for private health care, paying for it myself, than I have been able to get in here.
I can't sing the praises of the place enough. The facilities, the staff, the whole atmosphere, everything is there, everything is geared to get you back out there. Why wouldn't you want to come here?
To continue paying into retirement was a no-brainer, an absolute no-brainer. I would still happily pay into here for the rest of my life.
I can't think of anywhere else that's got these kind of facilities for people at such a low cost. And I just recommend to anyone, don't give it a second thought. Peanuts is the only way you can describe it. It is no money whatsoever to have that peace of mind that if anything goes wrong, you've got this backup. It's fantastic.
Like these retired officers, you too could benefit from our support and help to maintain the future of our class-leading facilities for other members of the police family. Details and sign-up forms can be found on our website.
So how are you going to take advantage of the police treatment centres then? How are you going to continue to pay into it and be able to come for treatment? When you were serving, you were likely to have made a payroll deduction each and every month, which gave you entitlement to come to the PTC. That's now a little bit different. You have to make a direct debit instruction, which you can download from the website at the PTC, fill it out, and it's 65 pence a week. That translates into just over £33 each year to be able to access a stay at the police treatment centres. All those forms, as I say, are available from the PTC website. So I'd encourage you to have a good browse, download them, get them signed up and get them in. If possible, it would be very useful for us to eliminate any breaks in service from when you are donating as a serving officer and a retired officer. If you're reading this as a retiree who's already been out and not yet signed up, then please just fill out your form as swiftly as possible and send it in to us, and then we can work through it. In terms of applying for treatment, what you have to do, again, you fill out an application for treatment form from the Police Treatment Centre's website. It needs to have a clinical sign-off. We will know whether you're a current donor, and then you can apply to come. In terms of coming, generally speaking, as a retiree, you get 1 week's residential treatment each year. If there's a clinical need, that can be extended to a second week, or you can be invited to come back on a second occasion, and that's per issue or per injury. So for example, if you arrive for treatment for your bad shoulder and you went away and that was then cured, and then 6 months later you had an issue with your knee, you could apply to come back as a separate condition to the police treatment centres and benefit from that particular service. Retired officers continue to be valued and respected, and by signing up to the centre you can join 5,000 of your colleagues who, as at June 2020, have signed up to the centre, and that number continues to grow every single week. And I should reassure you also that retired officers are very much an important part of our future and our plans for the future as well. Now, it costs almost £4.5 million to run the centre every year. The vast majority of that money comes income comes from serving officer donations and retired officer donations as well, but there is a gap. So we've had to be a little bit smarter in recent years about where we find the money to run the centres and be able to provide that class-leading treatment. A couple of years ago, we started running a lottery, and you can find sign-up forms for the lottery on our website. Every month there's a top prize of £1,000 and then graduated smaller prizes there, and twice a year we have a super prize of £2,000. As well as having the opportunity to win a prize yourself, you are clearly helping to support the police treatment centres with that. We also run bed and breakfast breaks at the police treatment centres, both of our centres in Scotland and North Yorkshire. It's £120 for 2 nights for 2 people total, so it's exceptionally good value. Both of those towns, Auchterarder and Harrogate, are quite vibrant. There's lots going on, and you simply can't find a cheaper room up to that standard of quality and facilities that you're going to be able to benefit from at the centre for that period of time. And again, that provides a very welcome injection into our financial coffers each year. Some of you will have fundraised for the police treatment centres during your service, and I'm sure that many more of you will have fundraised for other charities. One of the observations I always make is that police officers are fantastic fundraisers. They're always doing something for somebody, but often they're slightly reluctant or cautious or embarrassed about fundraising for their own police charities. I would implore you to do that for the police treatment centres, for St George's Police Children's Trust, or indeed any of the other fabulous police charities out there. So if you are one of those people who enjoys jumping on a bike and cycling from Land's End to John O'Groats and you want to raise money for somebody, then please think about the police treatment centres or St George's as your beneficiary charity, perhaps the next time that you're going to do that. You can also help us with talks like this by becoming a police treatment centres ambassador. If you're familiar with us and if you've been to the police treatment centres at some stage during your career, whether it be in service or retirement, you can help us by talking to other colleagues, whether it be in separate sit-down events, open forums, such as the one that perhaps you might be participating now, or just even talking to colleagues, friends, when you're on going out for a drink or when you're gathering for social occasions. Talk to people, ask them if they're a current donor to the police treatment centres. If they're not, encourage them to sign up. It will benefit them and it will help us. I want to turn my attention now very briefly to St George's Police Children's Trust. St George's Police Children's Trust started as an orphanage at the back end of the 19th century. That stopped in 1954 and there was about 600 children in the orphanage at that time. The charity, the orphanage, evolved into a grant-giving trust to benefit police officers who have died in service or been medically retired. I should emphasise to you that it's not a 19th century charity, it's a modern 21st century charity where we look to support the children and dependents of police officers, both serving and retired, and we have a very broad approach to what constitutes a dependent, adopted children, stepchildren, children of partners. The aim of the charity is to benefit those children who might have suffered an unimaginable event in their life with the death of their police parent or indeed by the retirement of that individual. So we looked at how we can support them. We currently have got about 300 beneficiaries as it stands at the moment in 2020, and we spend about £500,000 each year in supporting those children and those young people. Take a minute just to look at the slide there, and there's a couple of quotes from some of our current beneficiaries talking about the impact that the charity has made within their lives and how it's helped them. You can see the range of benefits listed on that slide there. Every single family who comes in, every child will get a new beneficiary grant of £1,000. There's an income assessed weekly support allowance which will range from £10 to £60 per child each week. There's seasonal gifts in the summer and Christmas, further education grants of £500 a term for every term that young person is away at university or further education. There's now £1,000 worth of grants for child counselling, £1,000 for driving lessons, very useful if you have children like me who took 3 times to pass their test. There's cover for partners if the partner of the police officer donor dies, and ex gratia grants which you can apply for new computers, for Duke of Edinburgh expeditions, for scout jamborees, for pretty much anything there, which is then assessed by the Board of Trustees. And again, I emphasise the Board of Trustees, all of whom are serving or retired police officers, very much of an altruistic view in this and are looking for ways in which we can bring that child or that young person into the pot. And there's also an opportunity to benefit from 1 week respite stays at St George's House in Harrogate, entirely free of charge, which every beneficiary family has access to once a year. To continue supporting the charity in retirement, you can download a sign-up form from the St George's website. The current costs for serving officers are 35 pence a week, £1.50 a month, £18 over a year. You don't have to pay in retirement. You can do, and we would encourage you to do so, because it's a marvellous charity that supports many of the young people, dependents of some of the high-profile deaths on duty of police officers, but also many more police officers out there who have been unlucky, accidents, life illnesses have caught up with them in some shape or form. If you donated during your service and you're now a retiree and something happens in your life that you feel that you might need assistance from the charity, you are eligible to apply for that, and I would encourage you to do so. And although we do have a very small number of retired officer beneficiaries who started their application in retirement, there are some, and they come every single year, so I would encourage you, the charity is there to be used. We need to have financial support for the charity, but the charity wants to be used as well, so if something happens, please don't be shy about applying and asking for help. That concludes my short presentation. I would encourage you to look at the website, and you can see the link on both slides there in front of you to find out a little bit more about the police treatment centres, how it can help you in retirement, and St George's Police Children's Trust as well. If you want to speak to somebody, please ring the number and that will take you through the reception, and they'll be able to direct your call accordingly. And finally, I'd like to thank you for your service, your commitment and dedication over many years whilst in service. I wish you a long and healthy retirement, and I would ask you to continue to please support the police treatment centres and St George's Police Children's Trust in retirement, and by doing so, that will help us to help you when you need us. Thank you.
Hello ladies and gents, my name's Paul Kelly. I work for Philip Williams & Co, and Philip Williams runs your current group insurance scheme that's in your serving. I'm an ex-cop myself. I'm going to make a presumption because of the service you've got in, etc., that you're all in the group insurance and you're all in the Police Federation. Obviously if you're not and you've got a bit of time to do, you might have time to address that depending on the presentations that you've had, that you've got to think about it. By virtue of the fact that you're all in the group insurance, you all understand what they are. But I'm just going to run through the changes that happen when you retire. Because they are quite significant and you've got to make some decisions, and there's also a time frame around those decisions. So I'm going to push on a little bit. Right, that's what group insurance is. It's a package put together. It's put together by the trustees, who are your Federation full-timers. And each force is the same but different. So they've all got life cover in, they all tend to have travel, they all tend to have different aspects. And I'm going to go through yours and what choices you've got when you retire. Okay? I'm not going to labour this too much because you know what they are. Right. Because if you've been subscribing to the serving scheme as a serving officer, you get an absolute rite of passage into the retired scheme. It makes not a jot of difference if during that time you've picked up, as we do, illnesses, injuries, etc., that might exclude you from other insurers. You get an absolute rite of passage, as does your partner. And when we say partner in the police schemes, that means your domicile partner. You don't have to be married, you don't have to be in a civil partnership, and it doesn't matter if you're in a same-sex relationship, it's your partner. Both you and your partner get that rite of passage. If your partner's not in the scheme prior to your retirement date, they do not get that rite of passage, and you can't join them retrospectively after you've left. Some of you will have a few months to do, some of you may have a year to do, 2 years to do. If you want to address that and look about putting your partner into the scheme, that's your decision. This isn't going to be a hard sell to get you to join, because Lancashire Police has got a significant number of officers and the scheme's very, very sort of subscribed to. So no one's going to make you join, but I'm just going to stress the points about this single point of opportunity to join the retired scheme. You can see there, point 3. You've got this golden hour to join. If you don't join upon your retirement, you can't leave it 2 or 3 months and then decide I'll join, because it'll be close to you. So again, it's not the hard sell. I know it sounds a bit like an MFI sale, buy now or else, but it's not that. It's not us that says it. It's not the Federation that says it. It's the insurers that says it, that says this is a golden opportunity to join. So let's go through it, your benefits. Right. Firstly, there's the costings. As you can see, I'm going to round up, it's 30 quid. 30 quid a month. It's a little bit more than you're paying now. And you'll see in some areas, you get less. That's the vagaries of insurance. As you get older, things like travel insurance, life cover, massively, become much more expensive. So you pay a little bit more, you get a little bit less, but hopefully at the end of this presentation, what I'll convince you of is that fiscally it makes good sense to do. Retired partners, £7.30, again, it's your choice whether you continue with that or you don't continue with it. If you don't continue into retirement, if you're serving, you can't make them join later. You can't apply later. Okay? Right. This is the major change in your scheme. Your life cover, as you can see there, is now age banded. You could be sat here now, you could be a 60-year-old serving cop or you could be an 18-year-old serving cop. We're all paying exactly the same as serving police officers and you get the same cover. Because this is age-based, as you can see, you're now on a sliding scale. As you retire, you go into 50% of your current cover as a serving officer. That's absolutely industry standard for every police force. I'm ex-GMP, exactly the same for me. You can see there, your partner likewise goes to 25k, and it slides down right up till when you're age 70, and at age 70, at the moment, the scheme ends. That may well change for you. It might well change for me, I'm 61 years old now, because the government, everyone accepts now that as a race, we live in longer. So the days when 70 is like God's waiting room has pretty much gone. So it might well be that we've got some schemes now that are creeping to 75. Lancashire's will probably go that way. But those are your rates at the moment. What I will say to you is those rates alone, I'm coming to them at the end when I show you some retail pricing. If you go out and try and buy this type of insurance, and the devil's in the detail of the insurance, you'd pay significantly more than you do as a group scheme because you still live in the same package as the serving officers. So you live in this massive book of insurance, and then further to that, you live in a book of insurance with the rest of the police in the country because group insurance is specific to police officers. I don't know why it doesn't exist anywhere else, but it doesn't. So that's your life covered, ladies and gents. Normally I'd ask for questions, a bit pointless. Push on. Right, because we're having this discussion now and I'm not with you, it's because of COVID. And travel insurance is obviously massively going to change at the end of all this. At the moment, this is July 2020, you can't buy it. You can't buy travel insurance except for some special niche covers. And at the end of it, retail policies are going to see a significant increase. Will yours go up as part of a group scheme? Very probably. Will it go up by a factor of 10 or 20? No, it won't. It'll go by pennies. The group, at the moment, at the end, I'll show you some costings. Your policy is amongst, if not the best in the country. For you, as a retired officer, it's a pay dirt now, because as you can see, you can go away for 60 days now because you're a retired officer. You couldn't do that when you were a serving officer. Most normal policies don't do that. It covers you and your dependent children up to the age 18 or up to 23 if you're in full-time education. God willing, they've all left you now, but I digress. So the travel insurance you've got is a full worldwide policy. It includes cruises, it includes normal sports like skiing, scuba diving, etc, etc. If you do want an extension on the 60-day, you can do so. So if you are going to do that world cruise, if you contact the office, numbers in the pack you've got there, we can do an extension so you can go for 90 days or whatever. Likewise, if you're one of those bonkers people that goes really, really deep scuba diving and you want an endorsement for that, they can do endorsements for all sorts of stuff. So again, you've got this built into you for you and your partner. It's worldwide. I'll be honest with you, and this isn't a hard sell. I keep saying it. I'm salaried. I'm not on commissions, right? This alone will cost more than the whole of your scheme. It probably cost very nearly the same before COVID. After COVID, we're talking retail policies probably going up 60, 70, 80%. So again, it's built in, it's there, it's available for you if you want to use it. Motor vehicle breakdown policy. Dead simple. You, your partner, are covered for any vehicle you're in or on. That includes Europe, it includes obviously the whole of the UK. Again, please be aware of it because it's got some things in there that other policies don't have. The misfueling thing is, again, RAC will drag you off a motorway, but then you pay to have it pumped out if you put diesel in a petrol in a diesel, whatever. Yeah, but this one includes a pump out and what have you. It includes if you run out of fuel. It includes if you get poorly and you want to continue on your journey, they'll actually hire a driver to drive your car back. That's particularly good cover if you're abroad and you're touring, to get you and your car back home if you're just feeling unwell. Again, it's in your policy, it continues into retirement. Comparable with the top, and I mean the top, RAC AA, and it's run by a company that does direct line, Admiral Insurances, etc. It's a massive company and they use local garages. So it's very handy if you break down in the burbs as opposed to being in the cities because you get a local garage coming out to you. Mobile phone insurance, this is brand new to your scheme, it only went in this year. Again, for you and your partner, it's replacement of any mobile phone you should use. There is a policy excess of £75 and that's simply to stop, to make it affordable. People were claiming for a cracked screen that is 60 quid to get repaired at a local shop. They were getting it, so they were getting a whole new phone. It was damaging what we call the claims history. It was making it more expensive. So by putting the £75 excess on, I personally had a broken phone the other day with a screen. I went and paid 45 quid to have a new screen put on rather than go through the insurance. It's just a way of controlling costs. What it doesn't say on there, but the limit of indemnity has gone up now, so it does cover those ridiculous phones, iPhone, whatever they are, that cost thousands, 1,200, 13, 1,400 quid. So again, it does cover it. It's like for like. And also, it's doorstep to doorstep. If you've got a broken phone, they turn up, take your phone, which you've wiped, give you your new phone. So you've got no gap in between having your phone. Right, really, really important this, ladies and gents, legal expense insurance. During the time you've worked, you've enjoyed the Police Federation looking after you for anything that's work related, and anything that wasn't work related, your group insurance looked after. So for example, God forbid, you got a criminal allegation made against you that was outside the job, this looked after you. If you had a consumer dispute, this looked after you. That continues into retirement. The one that I sometimes highlight, but I haven't on this slide, please forgive me, is employment. You can see there you've got employment cover. As you move into your next life, many of you, you're young, and that's without seeing you, you're young, you're certainly younger than me, right? Many of you will not retire because you're too young to retire, you're too active to retire, so you'll go and get another job somewhere. Trust me on this, and I would say this because I was an ex-federationist. Wherever you go, if you can find a union that does a quarter as much for you as the Police Federation does in relation to looking after you within the workplace, both and incidents outside the workplace, you'll do well. So you might find that, yeah, by all means join a union, but you might find that they're not quite up to your expectations. It doesn't matter a jot, because built into this is employment cover. So if you find yourself in a dispute, it also covers your partner. If your partner finds himself in a dispute with the employer, you've got employment cover. So if you've got to go to an employment tribunal, you've got cover to take you there. Also be aware of this, and please forgive me if you weren't aware of this. Built into it, you can see there, uninsured loss recovery, motor vehicle defence. Uninsured loss recovery is the little bit when you retire your car, when you insure your car, and it says, do you want legals? And it's normally 20, 30, 35, 37 quid. And sometimes you ask for personal injury separate. Hear me now. You don't need to buy it from there. It's built into this. It's built into this for you, your partner, and anyone else that lives in your home. So if you've got kids living at home, get rid of them. No, if you've got kids living at home that are driving cars, they don't need it. They've got it. That alone can save you a couple hundred quid a year because you don't have to buy it. You don't have to buy it now on the service scheme. You do not have to buy it on the retired scheme. Again, what I'm trying to convince you is by spending the money to join this scheme, you'll save more. Even if you say, well, I don't go on much holidays, or my mortgage is paid off, I don't need life cover, whatever. I'm just trying to convince you that the bells and whistles attached to this scheme and it has changed considerably over the last 2 years or so, really make it a no-brainer to do on it. So, legal expenses. Red care services, right. The days when cops got told, man up, sort yourself out, we don't do stress within the police, we all know is rubbish. People get stressed out because of illness, because of work pressures, because of that. This is a care and support package that covers you and your family at home for any of these issues. It's sad, but it's inevitable. You're going to have illness in your family. It might be your auntie or your gran or your mum that's got cancer that's making you feel depressed and you need help. It's a place to go. Can I say about this? It costs pennies. Nobody really thinks, oh, you know, yeah, red arc assist, it's whatever, until you use it. If you know, or if any of you used it, you know the value of it. Again, that continues into your retired scheme. Medical solutions, right. This is massive now, because some of you will still be in this COVID world. You can access 24/7 a doctor online, either face-to-face, on the telephone. That doctor is a GP based in Britain who has prescribing rights, who can refer you and can give you sick notes and fit notes. So in effect, you don't have to go to your own doctor. You may wish to. Sometimes, certainly with me, I've got a bit of an issue with my doctors. Generally, I've got to know I'm going to be ill next week because that's when I'll get in to see him. I've used this scheme. Don't laugh, but you can, I don't see you. I got bit by a cat. It flared up. I thought, oh, he'll come over it. In the end, I used this. He told me, he looked at I showed him the thing. He said, get to hospital now. Said, get to hospital right now. Said, it's one of the most dangerous bites you can have. I went to hospital. I got intravenous antibiotics. And here's the rub, no duff. He actually said, you could lose your hand with a cat bite. And I was going to sit there and wait for it to fester. I saw a doctor. We've got loads of times, chances are I'd have gone to the doctors anyway because it was hurting like hell. But the problem is that people, I hate to say it, sometimes just weather things. During this time, a lot of us have weathered things that we know we should have gone to the doctors to. You can go. That doctor could have prescribed me antibiotics and they'd have been shipped to my local pharmacy. I'd have gone and got it. I would have had to pay for them, even though I'm an old man, because it's a private one. But it would have saved me all the hassle of going to my own doctors. Likewise, if I need a sick note or a fit note, they'll give you one of them. The real important one, and this has saved lives, they will refer you. So you might go on, your partner, your child, and say, I've got this lump here. It might be a cyst, it might be something worth. I'm going to refer you to an oncologist. That's 24/7, anywhere on the planet. So if you're in Spain and you want to speak to an English doctor or in wherever, you can do so via this. Right, here's the hard sell. There, it's self-explanatory. I'm not going to explain it, other than to say, certainly on the family travel insurance, 50 quid is massively out of date. We compare that with, if you want to go online and look at it, it's called Post Office Comprehensive Plus. And if you look what's in that, it's about the same as yours. You've got a little bit of bells and whistles on yours that's not there, but certainly it's got Post Office Comprehensive, got nothing in that. At the moment, that's £440. You can't buy it at the moment because we're closed down. When it comes out, it won't be £440. So all I'm saying to you is, it's a massive decision because you're going to be laying out the best part of what, hundreds, 500 quid a year, whatever, on your insurances. But all we're saying is that compared to what you'd pay is probably nearer £2,000. So it's your choice. It's a choice that you've got to make, an educated choice. But please, 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 and I can't emphasise this enough, you've got to make the decision when you're retiring. We're in the Federation office now. They will send out to you a pack, which is a straightforward, yes, I wish to join, or no, I don't wish to join. No one will chase you. No one will ask you why you made your decision. But do not sit on your hands and do it 3 months down the line, because you just won't get in. I think that's it from me. Thanks very much. One last thing, and I always say this, and I know it's down the line so it doesn't make much sense. I've been a civvy for 12 years. I live down the road in Manchester. I thank you for all your service. Thanks very much. Stay safe.
Hello everybody, my name's Ken Davis and you're here to see a presentation on the Ben Fund. As serving officers nearing retirement, I'm hoping that the majority of you are currently members. Most of you will know it as the North West Police Benevolent Fund, but we've had a bit of a change over the last couple of years. We've rebranded, everyone knows it as the Ben Fund, so we now call it the Ben Fund. And the start of this presentation is a short video to show you what you can have access to our brand new state-of-the-art facility, which is only down the road at Langho near Clitheroe. So enjoy the first part of this presentation. What you see there is the culmination of this charity going from strength to strength. Most of you, as you're nearing retirement, will remember that the Ben Fund, the North West Police Benevolent Fund, had a symbiotic link with the Police Treatment Centre. Hopefully most of you who are still members understand that since 2015 the two charities went their separate ways. We both offer the same world-class quality treatment for psychological and physiological issues, but we do it in different ways. And this presentation is for you to have the choice of staying with the Ben Fund, hopefully, and we will look after you in many ways throughout your retirement. So this explanation is to see what we can offer you and what would be beneficial for you. St Michael's Lodge, the original place that we bought, was the old Victorian schoolhouse in Langho in the village, just on the outskirts of Clitheroe. Just at the time when all the officers that were requiring physiological issues, they wanted their physiotherapy, they were using the Ben Fund but going to Harrogate, going to the Police Treatment Centre, Harrogate or Octorada. There's a limitation to the use there and there's a limitation to the accessibility of it. And we started to realise that a lot of our members, you've got caring and commitments, you've got families, young families, a lot of you got parental commitments, you're even looking after your own parents in some ways. So getting away for a fixed week or 2 weeks once a year was not always an option. So we wanted to make it fluid. And access to physiological and mental health issues based on your needs, on your clinical needs. So we bought the old schoolhouse and we developed our own internal physiotherapist. And that worked really, really well. Where we developed from there was, we decided to enhance it. And what you've seen now is St Michael's Lodge, which is our new state-of-the-art, say new, 2017 it opened, and we can offer a whole wide range of elements for you. So we opened the new building in 2017. What does this building offer? Well, it offers 24 bedrooms, so it's a full residential facility. You might think you don't require that whilst you're living around the corner in Lancashire, but to get the correct treatment at times, you need to be away from all the distractions at home, at work. And in your retirement, who's to say that you're not going to suffer further issues from what you witnessed and what you participated in during your service? So you can stay with us based on a clinical need. St Michael's, for the Lancashire officers, both serving and retired, is round the corner, so you can have a full day patient facility. This is where the first difference is between us and the police treatment centre. There is no limitation to the treatment that you can access through us as long as there is a clinical need. We're not limited to 6 sessions, 12 sessions, coming once a year, coming twice a year. You keep coming as long as there is a clinical need, and you're constantly assessed for that. We have a fully functioning physiotherapy department. We have 2 physiotherapy rooms. We have 5 full-time physiotherapists that work at St Michael's. A whole range of skills, and they have a whole range of equipment there. One of the recent successes from St Michael's for our physiotherapy department is the treatment of policeman's heel, plantar fasciitis, if you can learn the Latin for it. We have some state-of-the-art machinery there, and we've had some great success. It's a condition which is very difficult to treat, but we've had high success in that field, and our physiotherapists are very proud of what they achieved. We have a state-of-the-art gymnasium. It's not there for you to pop in and use when you've got some free time. It's there to complement your treatment, because a lot of the issues police officers face, and it continues and gets worse when you get older into retirement, is you've been wearing all that kit for all those years, sitting in police vehicles with the kit around you, a lot of lower back complaints. And to complement the physiotherapy, we have the full range of materials, equipment that's in the gymnasium. £75,000 worth of equipment, and almost everything there is covered. One of our physiotherapists is a sports therapist. Another one is an ex-professional football player. So you've got absolute expertise, state-of-the-art guidance and assistance. Our gymnasium has a mezzanine area just above it. So from there, the physiotherapists do personal classes and small group classes. So you can do Pilates. That helps and assists and aids in the treatment for your lower back conditions, lower legs, upper legs. They do back classes specific to your condition, and a whole host of stretching type classes. Looking out at the back of the facility is our garden area. Now, it's not a massive garden area, but in the middle of summer, the Ribble Valley is quite lucky at times. It does have some really nice weather, and it's a beautiful area to sit out and looks out over countryside. And all the walkways are designed because we have full facilities for disabilities as well. So if we have disabled people who have got mobility issues, anything from a walking stick to a wheelchair, all our grounds are safe and accessible. Looking on the back of there, you can see the back of the swimming pool area. Our swimming pool was designed specifically for multifunction use to aids. You can see it's got a very upmarket, stretched roof system, so we never have to repaint it. We never have to clean it. The pool itself is split into 2, so you've got a standard pool for swimming, bit of exercise, bit of relaxation, but our physiotherapists also do classes in there. I Chi, very strange, I didn't understand it. I Chi is basically Tai Chi in water. It aids the muscle recovery. The water itself takes the weight of the body, and all the slow stretching is like they do in the Tai Chi. It assists in the muscles and the developing back of those muscles. Within the pool, there is also an underwater treadmill. A lot of people who have lower back and leg issues, they can't support, or it's very, very painful trying to do some of the exercises unsupported with the body weight. So in the water, the weight of the body is supported, and the underwater treadmill gets that mobility flowing again. And it's all under the supervision and guidance of the physiotherapists. The smaller pool you can see is the hydrotherapy pool. In there, there's a whole range of treatments that can be given by the physiotherapists. Again, just another way of aiding and bringing you back. But it's not just physiotherapy. The one thing that the Benevolent Fund has moved into over recent years is mental health. There's been a massive upsurge in people now recognising they do have mental health issues. Everything from anxiety, stress, all the way through to more serious PTSD. The North West Police Benevolent Fund, the Ben Fund, can treat those and assist in those. We have 4 full-time counsellors, and the counsellors are based at St Michael's. The counselling is available both on residential basis and drop-in patient daycare. We do offer a phone facility, but from the counsellors themselves, it's not the best way to deal with issues, but it is another option. So we cover those vast range. So physiotherapy for physiological issues, for psychological issues, we have a set of fully qualified counsellors. Where else can you benefit from the Ben Fund? Well, a lot of you may know and have used the fact that we have got lodges. We have 13 luxury lodges based in Cumbria. 9 are at the site on the banks of Whitecross Bay, which is overlooking Windermere Lake itself. You're a stone's throw from Windermere, from the town. Technically it's halfway between Ambleside and Windermere. You've got nearby facilities. The site itself, an area and part of that is a public site. So they have a restaurant, they have a bar, they have a swimming pool. All those are able for you to use as part of your stay whilst you're there. So how do you access the lodges? Well, there's 2 ways. If as part of your convalescence from anything that you may be coming to the Ben Fund for, as part of an assessment, it might be decided by the clinical team, but it's better for you to go away with your family and have a short break there. And it's free of charge. All the facilities are there for you to use. The lodges themselves, 5 of them over this last winter period, 2019 into 2020, have been fully renovated with brand new decking. Every lodge is fitted with a sunken jacuzzi on the balcony. They all have state-of-the-art 50+ inch plasma screen televisions and all facilities. Apart from taking a few towels and some food, everything is there for you free. But you can also go as a paying guest. If you're a member of the fund, we do have vacancies throughout the year because they're not always used by people on convalescence breaks. So if you check on the website, I'll give you some more details at the end of this, you can book either the sites at Windermere or the other one, which I didn't mention, the 4 lodges we have at Pine Lakes, which is near Carnforth. They're very, very reasonable rates, especially when you're in the heart of a national park in Cumbria. The rates vary, they change, so without trying to say what they are now, the best thing to do is look on the website if you're interested. And you can go from 1 night to 3 nights to 5 nights to 7 nights. Changeover is normally on a Monday and a Friday, but everything's inclusive. So what else do we have? How can the Ben Fund itself help you? Let's just give you a few pointers to run through all this. If you're a member of the fund, in addition to our physiotherapy, you now have access to the very best of all the therapeutic services on a residential basis at St Michael's. And as I said, it's all based on your clinical needs. To complement St Michael's Day Lodge, the day treatment facilities there have been enhanced. They're available across all the rest of the Northwest region as well. And the one thing that I didn't mention, it's mentioned through talks we give to other officers from other forces, but it may be beneficial for yourself, is we have a physiotherapy department in all the Northwest police forces. So in your retirement, it may be that you decide, I'm going to spend some of my money, I'm going to buy a lovely luxury little cottage in the lakes. I'm going to go to the lakes. Well, the Ben Fund has a physiotherapist department based in the Federation building in Cumbria. So you have day patient facility there. It may be you move to sunny, leafy Cheshire. Again, Cheshire, the Federation there you can access in the headquarters at Winsford. There's a physiotherapy department there. But as I said, it's not just physiotherapy, it's the psychological elements as well. At Merseyside Federation Building and at the GMP Federation Building, you can access the psychological there as well, and a counsellor will come and meet you there. Residential counselling is available, as I said, at St Michael's and the 2 external locations that I've just explained to you. The free convalescence breaks. There's only one criteria for getting the free convalescence breaks, either St Michael's or one of the lodges, and that is a signed medical form. It is the only time we will ask you to get any signature, and that is from your GP. The discounted lodges, they're available for renting at both the Carforth site and the ones near Windermere. There's another element which a lot of people do not realise. You can apply for financial assistance through the Benevolent Fund. We offer interest-free loans and grants. They've been very, very popular over the last few years, certainly the grants, but we don't just give money for anything and everything. When we say we give money for loans and it's interest-free, we have to be very careful because we're governed by the Charities Commission. We're not an authorised lending agency. So you can't decide, I want to buy a new car, the Ben Fund's 0%, the banks are 9%. It has to be on a case of need and hardship. Simple explanation is a police sergeant driving to work, involved in a PVA, damages the car, goes to work, explains it all, goes through it all, realises it's £1,000 to repair the car. With all the ongoing expenses at home, single parent, can't afford it. Certainly can't afford what the garage wants, but needs the car to get to work. A very simple application, usually through one of the trustees, which would be linked to the Police Federation of your force. And the trustees either meet up at St Michael's once a month, or they will do it virtually. They can make that decision to award you that loan. And the way you pay it back is direct via your pension. That's the preferable way. And it's repaid at an amount that you can afford. So it's not £100 set for £1,000. If you can only afford to pay £50 a month, that's what will be deducted from your pension until it's complete. The grants, it is usually the retired officers that access the grants. We have given grants for mobility aids. We've had officers who have been long retired. Their physical needs are such that they can't use the upstairs of their property anymore. They're looking at, or the family's looking at, perhaps putting them in a home. One way to keep them in the house is an extension to the property or convert a downstairs room to a wet room. Anything from £10,000 up to £20,000 is the standard fee for conversion to a wet room. Grants are offered and given by the Ben Fund for that facility. And a grant is, as it says, it doesn't have to be paid back. It is assessed by the trustees, but the element is, if you're a member of the Ben Fund, we are here to support you, to look after you. The other thing we do, which is, it's something, the vast majority of the use of this is from the retired, is mobility aids, wheelchairs, walking frames, scooters. We have a good selection of those at St Michael's, and you can have them on free loan for as long as you need them. We won't denigrate the National Health Service, but there's a lot of people go in for hip operations, and it's as soon as you can get out of bed, they try and send you home. And we've had cases where people have had, and it's quite a major operation, they've been sent home because they can just about stand up and they can walk using a stick. We have assisted where we have loaned free of charge wheelchairs, either push along or, in cases if it's beneficial, the motorised ones, the ones you see scooting around the pavement at 25 mile an hour. We can loan you them as well, and they're free of charge. And when you bring them back to us, they're fully serviced by a reputable company, so we can lend out to the next one. So as you can see, the thing about the Ben Fund is we will continue to support you through many aspects of daily life. So what does it cost you? Well, I'm hoping you've been a member while you've been serving. So you would have noticed on your payslip a deduction every month of £7.40. When you retire, the amount drops. It drops to £5 per month. The reason is, whilst you're a serving officer, one of the benefits that the Ben Fund gives you is a death grant. So if you were to die in service, we would pay your next of kin within 48 hours a £5,000 death grant. We don't do that for retired officers. So we've taken that away from the monthly donation subscription rate. So it's £5. We do it as a direct payment from your pension. For Lancashire officers, because the pensions are governed and run by Lancashire County Council, we ask you to set up a direct debit. You have to be a member whilst you're serving to remain a member when you're retired. So in watching this presentation and going through this, if for whatever reason you're not a member, you have the time now to join whilst you're in service, speak to your local Fed rep who will direct you the right way. The payments will start from your salary and then we can transition you straight into being a retired member. And it's £5 and it's given as a tax-free as well. So 20% of that is not taken off from your pensions. So it's actually only £4 you pay. That's the retired officers. And if you look at it, if you look at what all the things you'll pay for, £5 a month or £4 for a 20% taxpayer, we average price of a gallon of petrol is about £5.70. It fluctuates. Average pint of a beer, £3 to £4.40. Price of a Premier League ticket match. Now I don't go to Premier League matches, but we've been told that's £30 to £31. So that you're getting very good value for money. So in summary, the Ben Fund, the North West Police Benevolent Fund as you would have known it, is here to assist you for many areas of physiological and psychological care, and it's open for you throughout whilst you're a member. The final thing is, on the slide there, you'll see the contact details. The website is a brand new website. Hopefully as you view it, it'll be populated with more. It's thebenfund.co.uk. To access all our facilities, all the application forms are on that website. There's only a medical signature required for a convalescence break at the lodges and to access the physiological care. If a GP asks you for a payment for that signature, they can. We can't reimburse you that. So one of the things we always say to is negotiate with your doctor's surgery. Although they can charge you, you can say, well, I'm going to get my private care now and it's not going to impact on the NHS. Please, can you just sign this form? And of course, follow us, follow what we do on Twitter. And there's our Twitter site at NWPBF. So thank you very much for listening to this presentation. And I hope you've found the slides informative. There's much more information on the website, and of course contact your local federation and they can answer many more questions for you. Thank you very much.
Hello everybody, my name is Jonathan Howarth and I'm here talking to you today from Local Pensions Partnership Administration, and we are the scheme administrators for your police pension scheme membership. The purpose of today's session is to give you a little bit more information about the pension scheme that you're in and a little bit more information about how your pension will be calculated and also what you need to do if you've got any questions as you go throughout the retirement process. I'm expecting the session to last less than half an hour, and I do have a set of PowerPoint slides which I'm going to run through with you, which I will share with you now. Okay, the things that we're going to cover are My Pension Online, the different types of retirement, understanding how we calculate your benefits, understanding what your options are to convert pension into lump sum. We'll talk a bit about when and how your benefits will be paid, what will happen with your tax code, what death benefits are available, what will the retirement process be, and what to do if you've got any questions. My Pension Online. So we always start with My Pension Online because really that's one of the key things, is that people get registered for this service so that they can go on here and get information about their pension whenever they want to. So you can actually log into this system and run your own pension estimates based on different retirement ages, retirement ages of your choice, and it will give you an estimation of what your pension will be on that particular leaving date. In addition to that, you can keep your contact details up to date. You can look at your annual benefit statement that we produce for you every year. Once you're in receipt of your pension, we will produce a P60 and payslip for you. So again, you can look at that information on here. So please get signed up if you're not already. The address that you need to visit is www.yourpensionservice.org.uk. And then you just click on My Pension Login, which you'll find in the top right-hand corner of the screen. What different ways can you retire? So if we're talking about the 1987 scheme, it's normally with 30 years service or 25 years service at a minimum age of 50. If we're talking about the 2015 scheme, the normal retirement age is 60, but you can take a reduced pension from 55 and the reduction can be bought out. When we calculate your pension under the 1987 scheme, the first thing that we need is your average pensionable pay, which will be given to us by your employer. That's your last 365 days normally, and it's made up of basic pay and CRTP only. We then look at your pensionable service. So for the first 20 years service, 1 year of membership will represent 1/60th of your pensionable pay. And for the following 10 years, 1 year of membership will represent 2/60ths of your pensionable pay. And it will include any transferred in service that you brought with you when you joined the scheme. What you may want to do at retirement is convert some of your pension into lump sum. So that is an option in the 1987 scheme. What that will mean is that you'll take a reduced annual pension, but you will have, in exchange for that, you'll have a lump sum. The lump sum is in most cases tax-free, or certainly the majority of the lump sum is tax-free, but there may be a residual amount that is taxable, and I'll explain why that is in a few minutes. But just to be aware that if you do decide to convert pension into lump sum, your spouse's pension or any survivor's pension that may be available when you pass away will not be reduced or impacted because you have chosen to take a lump sum. So I've got an example here, which is PC Steve Taylor. His age at retirement is 50 and 3 months. His pensionable pay in his final year is £36,519. His pensionable service is 30 years. Now in the calculation, Steve actually gets 40 years because he gets the double accrual in his final 10 years of membership. So we put the service over the accrual rate and we multiply it by the pensionable pay that he earned in his last year. And that would offer Steve Taylor an annual income at retirement of £24,346. So he will be able to receive that amount every year, guaranteed index-linked money. What he may wish to do, though, is to convert some of that money into a lump sum. So what will actually happen is he'll take a smaller pension and he'll have an upfront payment. So if he wanted to do that, based on his age and the commutation factor that we would use in that scenario, his pension would then reduce to 18,259.50, and it would offer him a lump sum of £137,737.50. Now, the lump sum that he may wish to take may not all be tax-free, and what we have to do is work out how much of your lump sum is tax-free, and we do that in the following way. We look at the annual pension and lump sum amount, and we multiply the pension by 20, and we add in the lump sum. That gives us an overall figure, which in this case is £502,927.50. Now, 25% of that is available tax-free, which comes to £125,731.88. But the actual lump sum amount was £137,737.50. So that leaves a difference of £12,005.62. So basically, tax will be payable on the £12,005.62. What could happen is that you could decide that you want to convert less pension into lump sum, so that your lump sum comes back within the tax-free limit, or you could just take that and pay the tax on it. What you've got to be aware of is if you do start working backwards, your annual pension is going to increase, and then you may be eligible for more tax on that. When and how your benefits are paid. So pensions are paid in advance on the 1st of the month. Pensions are subject to income tax. Your pension and your lump sum has to be sent to the bank or the building society. There's no option to have cash. It's paid as soon as possible after retirement. Your pension increase will kick in from 55 unless you are retiring on ill health grounds, in which case pension increase will be applicable immediately. And you can look at your payslip online. Details of how to get online will be available in your retirement letter. What's going to happen with your tax code? Now, in the first year that you retire, you'll receive 13 monthly payments, and that's because you'll receive your final salary from your employer, and you'll get a pension very close together, and it's going to mean that you get 13 monthly payments in the first tax year. Now, your tax allowance has already been set against your salary as it is now, so that obviously needs to change, and it can take a little bit of time for that change to happen. You'll be taxed either at basic rate or at 40%, depending on what your earnings are. But your tax may be artificially high for 2 to 3 months before it levels out. We inform HMRC, you don't need to do anything. If you do overpay any tax in those initial few months, you will receive it back automatically. And I believe you get it back quite quickly. What death benefits are available in the scheme? So for a male officer who's married, in the event of his death, it's half the rate of his pension based on all of his service. For a female officer who's married, it's half the rate of all of her pension based on service from the 17th of May 1990 only, unless they opted to buy back the earlier service. For unmarried partners, there's no provision. For male civil partners, it's half rate pension based on all service. For female civil partners, it's half rate based on service from 17th of May 1990 only, unless, again, opted to buy back the earlier service. We do in some circumstances pay a dependent's pension. So that can be to an eligible child. So that's a child who's under the age of 16, but they might be over 16 and in full-time education. So if that's the case, we can continue to pay a dependent's pension to that young person until they reach 23. And in some cases, it can be paid beyond 23 if that person is classed as permanently disabled and is classed as a dependent. When the time comes, you must complete a notice of intention to retire form. That's normally given to you by your employer. It needs to include your full name, address and contact number, your bank account for pension payments to be made to, the amount that you wish to commute, and you must complete an election to commute before you retire to avoid paying tax at 55%. And a copy of that needs to be emailed over to pensions, but your HR department will take care of that. You do need to supply your birth certificate to HR so that they can take a copy of that also and send it to us. You also need to complete a member declaration form. This needs to include your full name, national insurance number, your retirement date, and your date of birth. And again, that needs to be sent over to us on the Ask Pensions email address, and your employer will assist you in that process. You do have a right of appeal, which I just need to make you aware of. So if you believe that anything's been handled incorrectly, the first thing to do really is to contact the person that's specified by your employer, which is normally your payroll manager. From there, you can go to the Assistant Chief Constable, or from there, you can go to someone independent like the Pension Ombudsman. If you want any more information about today's session or about your own pension, then you can drop us an email or you can give us a call on the telephone number on this slide. So first of all, the website address is www.yourpensionservice.org.uk. The email address is askpensions@localpensionspartnership.org.uk, and the telephone number is 0300 323 0260. Any questions, get in touch with us via those contact details, and hopefully you've learned a little bit about your pension and it puts you in a better position for what lies ahead, and all the best in the future. Thank you very much for listening.